we learned how to do creative financing. And for what that meant to us was subject to, which is when you take over a property, leaving the existing mortgage in place, and also owner financing, which is when there's no mortgage, the owner owns it free and clear, and they're going to be the bank, meaning we'll make payments to them to pay off whatever amount we agree to.
Ladies and gentlemen, welcome to Real Estate Investor MBA. My name is Tejas Gosai, and I've had the honor of helping hundreds of investors achieve the American dream by creating generational wealth through real estate. I've spent the past few years interviewing the most knowledgeable experts I could find in the business to cut your learning time and conquer the hardest subjects in the game. Check out rei.mba, which my team and I have packed with over 75 interviews and free access to our real estate roadmap, webinars, and publications. If you're listening, I am rooting for you, and you're already on your way to financial freedom. Cheers and happy hunting. What were you doing when you were 21 years old? You probably don't remember because you were drunk, and 21-year-olds are lost most of the time and they don't know what they're going to do in life. But my next guest, Jeff Donis, is 21 years old. He has transacted hundreds of multifamily units, and he got his start with his brothers in college, being in a dorm room, wholesaling and calling sellers to get an assignment fee and fund their business. And they did. And then they quit going to college and they syndicated some pretty large deals. It's amazing. They also own a portfolio, and their goal is to retire their mother. True immigrant story. Jeffrey's amazing. And it's important that I bring guests like this on the show to show you that you can do this in whatever way, shape, or form you want to. I've had 100 podcasts with 100 and some people. All of them have a niche or proprietary system that they've developed with a team of people to hack the real estate market. That's what I'm a big proponent of. In one way or another, you can figure this out, whether you're starting out in real estate or you're a seasoned investor, or a lot of my clients now are physicians, dentists, lawyers, engineers, high net worth individuals, entrepreneurs that work really, really hard, restaurant owners that are just, they're making money, lots of money, but they want passive income. And that's a big thing that I focus on this program, having people get to generational wealth or financial freedom and be able to create generational wealth for their loved ones. It's the mantra on our website, rei.mba. And I hope this is a fantastic interview with a young gentleman who is on his way to the top. So I hope you enjoy. I hope you're inspired. And I hope you listen to us on iTunes, Spotify, Stitcher, Google Play, iHeartRadio. And I have a bunch of tools on our website, financial analysis tools, and a roadmap that I created that will lay out your educational journey into the real estate world. I love you guys. Cheers. Thanks for making it. I love having energetic folks on the show, and you have done so much in a short period of time, over 1,000 units, and you've worked with investors. You are in the landscape right now. Rather than me go on about you, welcome to the show. Tell me about yourself.
Yeah, thanks for having me. I really appreciate it. As you mentioned, my name is Jeffrey Donis. I'm 21 years old. I work with my two brothers. One of them is my twin brother. He's also 21, and my older brother is 24. We live in Durham, North Carolina. We initially got started in real estate a few years ago. Now it seems like so long, but time flies. It's been about 3 years. And initially we got into real estate through single family. So we were all college freshmen. I was a college freshman at the time. My older brother was a upperclassman in college, and we heard about wholesaling. To fast forward and not to make a long story too long, but we eventually did a lot of deals in that space, transitioned into the multifamily space about 2 years ago. And since then, we've been able to get into a few different deals here in the Southeast. And now we are full-time owner-operators here in North Carolina, and we're looking in South Carolina and Atlanta as well. Our background, just to get a little bit more in-depth detail
Please.
about that. My mom is a single mother, so she came from Guatemala, which is obviously a Central American country.
Yeah.
She came here when she was very young. I grew up low income, and my goal, and alongside my brothers and I, is to retire her. So that's really what motivated us to get into real estate.
Bravo. Immigrant. I'm born in India. I have a lot of folks, and we do talk about that. Like
Yeah,
immigrants run the country to some degree, and it's honorable to say that. Hardworking people, America's the melting pot. Good story. And I love it that you're young, eloquent, and you're able to talk about multifamily. That type of growth is pretty incredible. 1,000 units, you have a bunch of investors. Where exactly are your properties?
yeah. So we own two in Atlanta, Georgia, two in Jacksonville, Florida, and then one is in Waco, Texas.
And this is with a pool of investors that you accrued?
Yeah, so we've co-GP'd on 4 deals, and we are lead sponsors on 1. We've obviously syndicated all of those deals and raised capital on all of them. In regards to where our investors are coming from, we can get into that too, but
Yeah.
yes, to answer your question, yes.
No, definitely wanna get into that. So, before we do though, I also wholesaled. I am a
Cool.
commercial real estate agent, and I manage a private equity fund, so we have a lot in common.
Mhm.
I'm a little bit older than you, but I was building some pretty big hotels and large projects in my early 20s. So I
Awesome.
don't think age is a factor here, especially if you've done that many transactions. But to the folks that like don't know what wholesaling is and how did you catapult that into owning properties? Can you share?
Yeah. For sure. So wholesaling for us was, and pretty much for anyone that I think shares this definition, is when you find a property. For us, it was off market, so we were cold calling mainly to get in touch with these owners. Going direct to seller, we would try to negotiate a price where we could then assign the agreement that we'd sign with the homeowner, which we called the purchase and sale agreement. We would then go and assign that contract using an assignment of purchase or assignment of contract to an end buyer, typically a fix and flipper, and we would tag on a fee on top of it. So that's what we call the wholesale fee. So the way that initially the first year, just to give you a little bit more background on that,
Yeah.
we
And the
were cold
success,
calling.
please.
Yeah, yeah. So we were cold calling in our dorm room, and I was a freshman, obviously, so I was a full time student trying to become an entrepreneur, and I was reading books like Rich Dad Poor Dad and Think and Grow Rich, which sparked my mindset and sort of started this journey for us. Eventually, led me to listening to Bigger Pockets and different podcasts like that. Slowly we started to learn more about the space, and we learned how to pull a list of data. We learned how to cold call, really just by doing it. Eventually, 6 months into that, we had gotten sent home from COVID because we were all at school, right? And a lot of our all the classes that we were in, obviously there was a lot of people there, so you were not. Slowly they started just getting people to quarantine, and then they just sent everyone home. So now instead of us having maybe an hour to 2 hours a day to cold call in our dorms in between classes and homework and dinner and hanging out with friends, now we were all back at home where we all live in Durham. And my brothers and I went to different schools, so we weren't all at the same university. So we would have these early business meetings. It was on FaceTime,
Yeah.
and it was hard to get a lot done because you're putting like an hour a day and you're not getting many leads. But once you're at home, slowly the number of calls we were making increased. To fast forward, it took us about 6 months to land our first deal, which ended up being the biggest deal that we did. And once we closed on the first one, we did about 15 transactions that first year, mainly wholesale deals. But to answer your question in regards to getting into investments, wholesaling is marketing versus we wanted to be investors. So we learned how to do creative financing. And for what that meant to us was subject to, which is when you take over a property, leaving the existing mortgage in place, and also owner financing, which is when there's no mortgage, the owner owns it free and clear, and they're going to be the bank, meaning we'll make payments to them to pay off whatever amount we agree to. So if it's 100,000, we'll typically try to get them to the least amount of a monthly payment, so we can go and rent it to someone else in cash flow. So that's how we got our first two rentals, was through creative financing.
Man, you really ran the gambit to get to that point. I can't imagine how hard you hustled And hopefully you enjoyed college too and had a couple beers, right?
Yeah, for sure.
So great. Then you're getting to a whole new level, different ball field when it's going after bigger deals, raising capital. It's still marketing, which is, what you definitely conquered in that initial part of it. I think it's hard for people to understand the jump of like it's marketing and you're just kind of doing it in a different way. How'd you do that with your first big deals or the ones that you syndicated?
Yeah, so as you mentioned, we learned a lot in the single family space. And the reason we ended up transitioning was because we're always like we like to think we're lifelong learners. So to give you a little bit more backstory, my brothers and I eventually left school after COVID. We never went back. We just were full time entrepreneurs from that point on. And instead of paying for traditional school, we started investing in mastermind groups and things like that, which taught us the creative financing and how to syndicate deals and those kinds of opportunities.
Bravo.
But since we had already learned a lot just by hustling and, as you mentioned, doing it versus actually just watching YouTube videos, we were cold calling ourselves, doing marketing. Eventually, we kept doing our own active education, and we heard about syndication through different podcasts and different mastermind groups. And they kept saying commercial real estate, and people on these podcasts kept saying they'd wished they'd gone bigger sooner. And we were working pretty much all day, 9 to 8, on most days of the week, including weekends. So for us, the hustle was already there. We just thought, why not apply the same work ethic into something that we want to be in
To a
long
big
term?
deal. Yeah.
Exactly, because we didn't really want to be in single family forever. We knew that from the first year. After doing it, it really wasn't something we enjoyed because we were talking to. Although it's a great way for us to get started, and we don't throw any shade on it, but we knew where we wanted to end up. So we went eventually decided to pull the plug on that. We took all the money that we made in profits and invested in a mastermind group. But the first thing was we read the best ever apartment syndication book by Joe Fairless, which laid out the foundation and pretty much let us know what the next step was, which for us was to find a mentor.
So find a mentor, find a property, right? So you had to go scour the market for the right asset. That's like what everything's based on. So then you found it and got it under contract, right? And then started the process of like, hey, investors were buying this property.
Yeah, good question. So for us, we were now in this mastermind group, and I didn't answer your question, the first one that you asked, so I'm sorry about that, but I'll get to it.
Yeah,
So
please.
we were in the mastermind group now, and not only did we continue to learn about syndications and how it was structured and how it works, we initially had tried finding our own deal. We thought we could do it ourselves. At first, go after large 100+ unit apartment complexes. Quickly realized that brokers don't take you seriously if you don't have a track record, which we didn't have. So after joining this mastermind group, it gave us access to a few different things. First thing was a team. So in the mastermind group came a KP that we now use, a key principal, a partner in that same key principal, who's now a mentor in life, really, outside of business.
That's great. You
But
need good people.
100%. And his teams was now someone that a team that we had access to. So that included an insurance broker, a debt broker, and an attorney, which all play vital roles, obviously, in our business. But outside of those, that immediate team, there was obviously a network of other people just like us, but they had a lot more experience. Typically, tend to be a lot older and more successful in various aspects in their previous lives, and now we had access to them. So we were quick to realize, okay, we may not be able to find a deal as fast as we'd like to because it does take time to build those relationships with the brokers, which my brother Kenneth handles for us. He does our acquisitions and asset management, but that was taking time. So we quickly realized there has to be another way for us to bring value to someone who already has deal flow, which means brokers are sending them deals because they
Right.
already trust them.
Got to get the inventory.
Exactly. So that's where the co-GP model for us at first was what we took action on. So initially, that's how we found our first deal. It was not by finding it ourselves, but by bringing value to another team member within our network.
It's amazing, man. I love it. I love it. Bring me up to speed. So right now, I talk to folks on this program. I'm like, what's your crystal ball? What do you see happening? You're probably analyzing and tracking a lot of stuff. So you have a bunch of properties, 1,000 units. You want to get bigger, better. Are you looking in the same markets, same areas? Deal size? Can you share? Purchase price range, things like that.
For sure. So as I mentioned, I live here in Durham. We like to be close to where somewhere where we can drive within a few hours. So we look as far as Atlanta, Georgia, and we're looking in North Carolina markets like Charlotte, Raleigh, Durham, Greensboro, Winston-Salem. And then for South Carolina, there's a few different markets like Charleston, Spartanburg, Greenville. There's a few else that I'm missing, but pretty much those three states in the southeast, including Atlanta, not really a state, but a big MSA. And then outside of that, in regards to deal criteria, it's 100 to 200 units, B class, 1980s vintage or newer. And we learned that not the hard way, I wouldn't say, but after doing our last deal, it was a little bit of an older vintage C class property in a lower income area for sure. So we got it done, but that sort of solidified what we wanted our criteria to look like moving forward because we made a lot
Maintenance
of relationships.
issues and a bunch of problems with the property?
I wouldn't say problems with the property, more so when it came to our capital partners. A lot of them don't like those kinds of properties. So we learned what they're looking for. And I think if you can, in my opinion, if deal flow for us is something that we don't have a problem with, the last thing I want to have a problem with is capital. So if we can just match the two, I think that will help us scale a lot faster. So that's sort of the approach was to match our criteria, not only with our own investment philosophy, but also where we won't have as much trouble raising money.
Yeah, so let's talk about raising money. Who did you go to? What kind of investors do you have? How many do you work with, if you don't mind sharing?
For sure. So initially, it was just family and friends. Where honestly, I didn't have many. I had a lot of friends, but when you were in college, so
Yeah.
they don't have a lot of money, right? And typically, our minimum investments obviously are anywhere from 50 to 100, right? Okay, which most people our age don't have. So what we did was we were always active on social media, posting content on Instagram, LinkedIn, Facebook, TikTok, YouTube, where we were already building an online presence, which helped establish credibility, which is one thing that we learned from reading that book, The Best Ever Apartment Syndication book by Joe Fairless. It talks about being a thought leader in your space and building a thought leadership platform, which was what we had already been doing in wholesaling. We just weren't really under with the intention of trying to do that. So
Yeah.
when we look back, it was like, oh, cool, we kind of already have that. So on top of it, we created a podcast. I started going on other people's podcasts, doing podcast tours. We've been on some pretty big ones. So over time, investors have come from family and friends who looked us up and saw that we have a legit website, a legit team. And when they speak to me, obviously they know I'm young, but to be able to answer their questions, and if I don't have the answer, which honestly I don't have every answer, I have a team that I can go to who I can get the answer from, which I think is an important thing for anyone who's new. As long as there's a book behind me called Who Not How, it's really about who you know, and that's from my limited experience versus what you know. Obviously, you want to know something, but to get back onto the topic, we then just started talking to those people who were coming through our marketing funnel, which my brother had created, where they would find us on social media or through a podcast. They'd sign up for some type of lead magnet and then get into our email automation, which would kind of pull them through and eventually book a call with me. So eventually, I just talked to the investor, build a relationship, and with the intention of adding them to our portal and them investing in a deal. So far, we're probably at 10 to 15 investors in our investors, but you obviously don't need that many investors if they're repeat investors. And
And if
we're
they're
also
doing
partnering.
sizable, they're making sizable investments.
Right, exactly. And that's growing pretty, I wouldn't say exponentially, but it's growing. And referrals, as we start coming full cycle on deals, I expect that to grow as well.
It's excellent, man. I love it. Who's the boss? You got a couple brothers there.
Yeah, it's a good question. We have like exact thirds of the company, so
Nice.
we're all the boss. It's
Yeah,
like a debate every time we have a question about something.
sure. Of course. And I mean, I'm being facetious, but
Yeah,
you seem like a systems guy. Can you share some of the software and stuff that you use to be able to execute? And
yeah,
like, do
yeah. It's
you
funny.
use virtual assistants?
We don't, not for this, not yet. And honestly, none of us are systems guys, but I do understand the systems to a certain extent. I'm more of like a phone guy, you know what
Yeah.
I mean? But some of the systems that we use that have played tremendous roles in helping us get to the point where we are is Active Campaign for email automations, and the number one tool for raising money, in my opinion, is some type of investor portal, which for us is Syndication Pro. Really, I have a good relationship with those guys, and they're really helpful whenever we have an issue with the software. But overall, the software is awesome. Do you use the software?
We use Juniper Square.
Yep, yep. I think it serves a similar purpose. I've heard
Yeah.
good things about Juniper.
What's yours called? I gotta write it down.
Yeah, it's called Syndication Pro.
Okay. Awesome. So then it packages up your deals, financials, everything, makes the offering, and then keeps it legal.
100%, exactly.
Are you using private placement for your deals?
Yep, our attorney will create it, and then we'll upload it into the portal.
Sure. And you're doing that deal by deal because they're pretty sizable.
Exactly. We'll syndicate every deal.
That's awesome. Accredited investors, unaccredited?
In the past, they've been 506B mainly, so non-accredited and accredited. But moving forward, we have a growing online presence, so I think there's something to say about potentially doing a 506C.
Yeah. I'll tell you from my experience, accredited investors and having a fund in that space is incredibly difficult, but rewarding because you're dealing with a lot of very educated folks that usually are doctors or lawyers or engineers.
Yeah,
And we've had a good run. My fund's only a couple years old now, and
awesome.
yeah, yeah, it was grueling to get to that point. So I know exactly what you're kind of going through a bit in scaling up and getting to that next point. It is mentorship too. It's like
Right.
if you don't have the right people, you really can't get to the next level. Let's talk about that. What's your dream? What's your goal? And how do you see the market right now and what you're navigating to help you get there?
Yeah, so on a selfish personal level, my goal is to retire my mom first and foremost, and with my brothers, and then alongside that, we want to become financially free ourselves. Business goals is to do about 1 or 2 deals a quarter. This year, we'll get into sort of what the outlook is, but that's difficult in this environment with not a lot of deals penciling out for various reasons, including the interest rate environment, lenders, capital markets, all of that. On top of it, just we do have a lot of people in our close network and then on our platforms that follow us that we'd like to help inspire. I think just by being young, it seems like a lot of people who are new are attracted to us, whether they're older or just young. We're seeing that gain traction, and we hope to be that kind of that light in the darkness, if you will.
Yeah,
So that's something that we like to do, and
I
I'm very
love it.
faithful as well. So to spread God's message for us is big. On top of that, in regards to the outlook of what we're seeing, my brother, he's our acquisitions guy, so obviously we talk pretty much all day, every day. And what he's seeing in the market is there's still that big buyers or seller and buyer discrepancy between when it comes to pricing. And last time we checked, I mean, we weren't getting anywhere near what the listing price was. The closest we've gotten has been 10% below what the listing price was, which is still a pretty big gap for us. We still are seeing some deals pencil out, but majority of them aren't. In regards to interest rates, I don't know what's going to happen, but if I had to I'd rather just go in fixed right now. I think anyone who is, somewhat, I wouldn't say responsible, but has less of a risk tolerance, they would be looking to go fixed, which is something that we're looking to do as well.
In the markets that you're seeing, any softening? Is it coming down at all?
Yeah, for sure. So in North Carolina, there's a few markets where just last year, properties that were trading at 160 a door are now closer to 130, 140. Uh, it's going down, but with interest rates being so high, it still doesn't pencil for us. So we need it to be now instead of 130 2 months ago. Now we need it to be at 100. So regardless, I think it's hard to find a deal that pencils for us. But on top of it, I think if you're excuse me, I think it's still a great opportunity to buy if you can find a good deal, regardless of where interest rates are. If you carry the philosophy, or if, in regards from our perspective, we're looking for deals that cash flow, and if they're cash flowing today, given the interest rates that we're going in with, most likely, right? I mean, who knows? But I think there's a higher probability of when we're planning on exiting, that interest rates are lower, and even if they're not, we'll still do okay. But if they are lower, then you can either refi or sell and interest rate into a better interest rate environment. So I think it's still a good time to buy because you're able to get bigger discounts.
Yeah, and so who's handling the underwriting?
My brother,
Okay, so you're still putting out letters of intents, offers, you're trying, and they're just not landing where you need them to be.
exactly.
So you got to be patient, which is cool that a young dude like you and your family can have that patience early on. What do you tell somebody? I have a bunch of people who listen to the podcast, or even just friends and colleagues that have seen me and my story, and I'm on social media, and they're still like not, they want to do something in real estate. They're still not there. They want to buy their, first single family. I'm like, dude, just buy a single family, just one. Deal with the headaches. You'll hate it and you'll like it. And you might do something else. What do you tell people? How do you inspire some of the folks who get them to move the needle?
Yeah, so a lot of people that come to us have little to no money, to be honest. So, what I'll say is, typically, if you don't have any money, I'd say education, getting the right mentorships, sort of changing your mindset is the most important thing. So I'll recommend a lot of books. But outside of that, I think wholesaling or getting your license so that you can build up your income streams so that you can then go invest is a great way to do it. Now, if money isn't really an issue, which seems like maybe your audience it might not be, then I would say for me, I like to go into multifamily personally, even if it's smaller multifamily. But residential, single family investing is awesome as well. It's all about understanding what you're doing. So education for me is the biggest thing. Is making sure you're getting the right education.
Love it. Good answer. So, in closing, anything you want to share about how hard your brothers are working more? Are they working more than you, less than you? Who's working? Who's up the latest? Are you guys competing with each other?
Yeah, I think it's a healthy competition. So it's not necessarily like we're keeping score because we do have the same goals, right? So it's pretty much in alignment. But we all pretty much have our own seasons. So when I'm raising money on a deal, it's obviously a lot busier than potentially my other brothers. But my other brothers, my marketing brother, who does our marketing, he pretty much is always busy because there's always marketing to do. So I'd say overall, he's probably always working on projects. And for me, I meet with people every day, but some days it's a little slower. So I just try to educate myself a little bit more on those days.
Love it, man. Well, your story's amazing. I wish you nothing but the best to you and your family. Keep inspiring folks, and I appreciate you being on the show.
Likewise, thanks for having me, Tejas.
How does somebody get a hold of you or invest with you?
Yeah. So you can. My brother made a really awesome checklist that he made for any passive investor looking to vet any passive investment opportunity. You can visit that at www.donisinvestmentgroup.com/checklist, and our website is the same link, just minus the /checklist. You can visit our podcast at the Real Estate Monopoly, and you can find us on all social media platforms at Donis Brothers.
Love it, love it, love it. So that's Jeffrey Donis. It's Tejas Gosai over here. Real Estate Investor MBA, REI.MBA. We love you guys. See you next time. Cheers.